Hi guys, this is Ravi and you are listening to me on the Nifty BN channel. Today is Saturday, May 22nd, 2021. Welcome to the latest episode of the Post-Market Analysis series, where we would be analyzing the equity and derivatives data of the most recent session and try to assess the range and market positioning for the upcoming session. Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community. The Nifty 50 index on Friday registered a solid bull candle on the daily scale and negated the formation of lower highs and lows of the last three sessions. In the process, it also cleared its near-term hurdle at the 15137 level. Now, if it manages to breach the 15250 level on a closing basis, then 15336 and 15431 will be the next crucial resistance levels on the upside. Also, if we have a close look at the chart, we can see that after a successful breakout, the index has retested the falling trend line. The falling trend line will now act as a dynamic support in the event of any range-bound consolidation. Today's low of 14985 will act as an important support on an immediate basis. While if Nifty slips below this level, then the next supports to watch out would be 14900 and 14750. A similar analysis of the Bank Nifty index shows if the banking index manages to breach the psychological level of 35,000 on a closing basis, then 36,497, 37,232, and 37,708 will be the next crucial resistance levels on the upside. Today's low of 33,559 will act as an important support on an immediate basis. While if Bank Nifty slips below this level, then the next supports to watch out would be 33,000 and 32,115. Now to data analysis. Almost all the sectors participated in Friday's rally, with banking and financial services sectors contributing maximum to the surge. SBI was the top gainer in the Nifty 50 index. It climbed 5.06% to 404, while Adani Transmission was the top gainer in the Nifty Next 50 index. It rose 4.85% to 1453. State Bank of India, Bank of Baroda, Tata Motors, Zee Entertainment, Indiabulls Housing Finance, and Hindustan Petroleum were the most active securities by both volume and value. Among individual stocks, a volume spike along with a price change of 15% was seen in Banaras Beads, Crest Ventures, Tangamail Jewelry, IIFL Securities, and NBI Industrial Finance Company. A total of 140 stocks, including names such as Butterfly Gandhimati Appliances, IIFL Securities, NBI Industrial Finance Company, and Tangamail Jewelry, witnessed strong buying interest from market participants as they scaled their fresh 52-week highs on Friday, signaling bullish sentiment. On the other hand, 6 stocks hit their fresh 52-week lows. Market breadth was in favor of gainers, as out of the Nifty 500 stocks, 330 stocks ended in the green, 169 counters settled with cuts, while 2 remained unchanged. Indian Bank, Gemna Auto Industries, and HFCL were the top gainers, gaining more than 10% each, while La Opola RG and Havels were the top losers, falling more than 4%. A total of 20 F&O stocks had more than 50% delivery volumes on May 21st. They are Hero Motorcorp, Infosys, Alchem Labs, TCS, Pi Industries, Dabur, Hindustan Unilever, HCL Tech, Godrej Consumer Products, Petronet LNG, SBI Life Insurance Company, Britannia Industries, Emphasis, LIC Housing Finance, Power Grid, Kotak Mahindra Bank, Nestle, InfoEdge, Bharat Forge, and Nippon Life India Asset Management. A high delivery percentage suggests that investors are showing interest in these stocks. Despite the huge rally, only 8 stocks witnessed long build-up, that is, increment in both price and open interest. They are Emphasis, SBI, Torrent Power, ICICI Bank, Bank of Baroda, the Federal Bank, Max Financial Services, and Bajaj Auto. Three stocks saw short buildup, that is, reduction in price with increment in open interest. They are Gujarat Gas, Page Industries, and Alembic Pharma. 40 stocks witnessed long unwinding, that is, reduction in both price and open interest. The top 10 stocks where long unwinding is seen are Grasim Industries, Aurobindo Pharma, Bosch, Havells India, Sun TV Network, United Spirits, Gale, Dr. Lal Path Labs, Pfizer, and NMDC. And finally, a whopping 104 stocks witnessed short covering, that is, increment in price with reduction in open interest. The top 10 stocks where short covering is seen are Ultratech Cement, Coforge, Lupin, Trent, Cipla, Divis Labs, Maruti Suzuki India, ONGC, Bharti Airtel, and Infosys. If we observe closely the number of stocks that witnessed long buildup and the number of stocks that witnessed short covering, it is clear that stocks that witnessed short covering outnumbered the stocks that witnessed long buildup. This suggests that the rally we saw on Friday is more of a short covering and strategic shorts which got formed have been covered. Now fresh buying is needed to carry the market higher. Else, the rally will fizzle out sooner or later and the market will start declining again. Now to the FII DII data analysis. As we usually do, let's start with the retailers. The retail investors were bearish on index futures and bullish on stock futures. They unwinded 13,898 net long positions in index futures but added 37,600 net long positions in stock futures. They were extremely bearish on both stock and index options. They added a huge number of shorts in index call options and covered a huge number of shorts in index put options. They unwinded a huge number of longs in stock call options and covered a huge number of shorts in stock put options. Now to domestic institutional investors. The DIs too, like the retailers, were bearish on index futures and bullish on stock futures. They added some short positions in index futures, but unwinded some short positions in stock futures. They were bearish on both index and stock options, as they added some long positions in index put options and some short positions in stock call options. Now to the key players, the FIIs. The FIIs were bullish on the index futures and bearish on the stock futures. They added some long positions in index futures and unwinded some long positions in stock futures. They were extremely bullish on index options as they added some long positions in index call options and unwinded some longs in index put options. They were slightly bullish on stock options as they covered some shorts in stock call options but added a slightly less number of longs in stock put options. And finally, to proprietary desks. The pros too, like the FIIs, were bullish on the index futures and bearish on the stock futures. They covered some short positions in index futures but unwinded some long positions in stock futures. They were extremely bullish on the index options as they covered a huge amount of shorts in index call options and added a huge number of shorts in index put options. They were bullish on stock options too, as they covered a huge amount of shorts in stock call options and also unwinded a huge number of longs in index put options. Now to the cash market. Both FIIs and DIIs turned net buyers in Indian equities on Friday, with foreign institutional investors buying shares worth more than rupees 510.16 crore and domestic institutional investors purchasing shares worth more than rupees 649.1 crore as per provisional data available on NSE. This is only the second session this month after 18th May where both FIIs and DIIs were net buyers. On a month to date basis, The FII's net sold rupees 10,467.2 crore worth of shares, while the DII's net bought rupees 2,209.72 crore worth of shares in the Indian equity market. Now let's look at the option chain of the May 27th monthly expiry. Let's start with Nifty. Maximum call open interest of 58,710 contracts was seen at the 15,500 strike. This is followed by 16,000 strike, which holds 43,215 contracts, and 15,700 strike, which has accumulated 38,716 contracts. The call option of 15,700 strike price has witnessed fresh open interest addition of more than 19,648 contracts, and it holds cumulative open interest of 38,716 contracts. Maximum put open interest of 66,062 contracts was seen at 14,000 strike. This is followed by 15,000 strike, which holds 61,174 contracts, and 14,500 strike, which has accumulated 49,536 contracts. The put option of 15,000 strike has witnessed fresh open interest addition of more than 23,940 contracts, and it holds cumulative open interest of 61,174 contracts. Maximum percentage change of open interest was seen at the 16,450 strike on the call side and at the 15,150 strike on the put side. In fact, huge open interest addition was seen in the 15,000 to 15,200 zone on the put side. So on any corrections, this zone becomes a good support now. We believe this is a buy on dip market, and any short-term correction or dip should be considered as a buying opportunity going forward. Now to Bank Nifty. Maximum call open interest of 46,741 contracts was seen at 35,000 strike. This is followed by 36,000 strike, which holds 42,515 contracts, and 37,000 strike, which has accumulated 28,993 contracts. The call option of 35,000 strike has witnessed fresh open interest addition of more than 23,475 contracts, and it also holds maximum cumulative OI of 46,741 contracts. Maximum put OI of 40,730 contracts was seen at 33,000 strike. This is followed by 34,000 strike, which holds 34,134 contracts, and 32,000 strike, which has accumulated 33,461 contracts. The put option of 34,000 strike has witnessed fresh open interest addition of more than 26,088 contracts, and it holds cumulative open interest of 34,134 contracts. Maximum percentage change of OI was seen at the 37,100 strike on the call side and at the 34,700 strike on the put side. In fact, fresh OI addition was seen at almost all the strikes on the put side and in the 34,900 to 34,200 zone on the call side. This indicates that supports are moving higher. If we look at the bottom section of both Nifty and Bank Nifty options, we can immediately identify that the highest percentage change of open interest is at a far out of the money strike on the call side. The same is at the money strike on the put side. This suggests that put writers are far more aggressive compared to call writers at this juncture. As many as 39 companies will come out with their results on Monday, with the prominent names being Grasim Industries, the Ramco Cement, and Mahanagar Gas. For May 24th, 5 stocks, namely BHEL, Jindal Steel, National Aluminium Company, Punjab National Bank, and SAIL are under the F&O ban period. The Nifty 50 index may continue to remain highly volatile ahead of the monthly expiry on May 27th. The options data indicates an immediate trading range between 14,800 and 15,500 for the coming week. Last week, we predicted that the index would trade between 14,500 and 15,200, and the accuracy of our prediction is for everyone to see. Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.